Okay, Banner AR collections training. So this is going to be a general collections training. What I was trying to do is it may hit your due diligence and hit your collections, and then hit your write-offs, because those are the things that have to be done in the next few weeks, getting ready for preparation for year end. And so I was just trying to give everybody a kind of overview of everything and how everything works before we go into that season of things. So what is collection? So collections for us is just a way for the college to collect on a debt that is owed. There are a few items that we have to do first before we can send a student to collections. And there are a few things that we have to do, if certain things happen along the way. So that's kind of what this training is about, is how collections works, and how it works in combination with our due diligence and write-offs, right? So that's all collections is just an option for the colleges to collect a debt owed to them for tuition and fees, books, things like that are on the account that have not been covered by financial aid and have not been paid out of pocket by the student. So collections works like this. You send students over to Williams and Fudge, and Williams and Fudge is our main person. We did piggyback off of a contract with the Board of Regents schools, and there is another option that we have. I can't remember the name of the company, but we don't have any programming written for that company. So if you choose to use someone other than Williams and Fudge, you will have to create your own files. So Williams and Fudge is our collection agency, and we contract with them to collect debts on our behalf. When they collect debts on our behalf, according to when you place the account is how much of the percentage that you're going to owe. I know that is a weird statement to make. However, we were under contract with Williams and Fudge on our own, and on our own, it was a 25% collection fee. Then we found the Board of Regents contract, and we piggybacked, which is the word that Toya uses. We piggybacked on top of that Board of Regents contract, and the Board of Regents contract was 13%. So if you placed an account with Williams and Fudge before we started using the account the contract that we piggybacked off of for Board of Regents, you will be paying a 25% fee. If you placed it after we started using that contract, then you will be paying a 13% collection fee. You only pay Williams and Fudge if they collect on the debt. So if you send them a student and they never collect a dime from the student, you don't owe Williams and Fudge a dime. But if they do collect, then you owe them either the 13% or the 25%. That is depending on when you placed it with the college. There are two options when it comes to collections with Williams and Fudge, when it comes to reporting the student to the credit bureaus. Your college can choose to report the student to the credit bureau, and they can choose not to report the student to the credit bureau. So it is dependent upon what your college has decided as to whether they are reported to and it hits their credit and goes against their credit, or whether it doesn't. So someone at your college should know that. If they don't, then if you want to reach out to me, or you can reach out to Andy Bass. I put his email address at the bottom of the agenda today. You can reach out to Andy Bass. He is our sales rep. He is our account person, and he is very good and very nice. He's one of the nicest people I've ever met to be in the collections business. So he can probably tell you what your college has chosen if you don't know. The second thing that we have with Williams and Fudge is whether you get net statements or gross statements. So those are up to the college. Net statements are, they take their percentage off of the top before they send the money to the college. gross statements are, they send the entire amount to the college. You put it onto the student's account, but then the college is responsible for paying Williams and Fudge, right? That 13% or 25%, whichever one you place on that student's account. I'm hoping, because we've been on this new contract for at least a year. So I'm hoping within the next year or so that we'll kind of roll off of the 25% and we'll all be on the 13%. Right now, we're just handling the stragglers that we had already placed at the 25% due diligence. So that's kind of how Williams and Fudge works. We'll talk a little bit more about the file that you guys send to them and what you do to send it to them. I won't be able to show you any of that, and I won't be able to go into huge details on that because we don't have access to that. Only the colleges do, but I can give you an idea of what you need to do or who you need to contact in order to figure out how to upload a file to Williams and Fudge. So that's kind of how what collections is, how collections works from the Williams and Fudge standpoint. Your net and gross statements are kind of also a college choice. So someone at your college should know that. If you've been using your collection agency pretty regularly, your back-end accounting office probably would be able to tell you whether they get gross or net, or if you are getting payments back from Williams and Fudge, you should be able to tell whether it's gross or net. If you can't, or you haven't been sending students to collections on a regular basis, again, we could probably reach out to Andy and he can tell us what your college has specifically chosen, but that is on a college-by-college basis. So let's pop into our banner procedure. So this particular thing, so for collections, this one is not an accounting procedure per se. It's more of a banner procedure. And so if you go to our accounting website, just kind of like we always do, you can download the accounting procedure. And the accounting procedure looks like this. It gives you an overview of what the collections agency is, what the unpaid accounts are for tuition, fees, and miscellaneous expenses that we have been unable to collect through ordinary collection methods, which ordinary collection methods for us is notifying the students that they have a balance, either via email or via letter in the mail, or via text messaging if you have that at your college, those type of deals. Text messaging doesn't really count toward your collection attempts, but letters and emails do. And so this is kind of where we get that. So a student is deemed an uncollectible account by ordinary means if the student has been notified of the debt in writing 2 times, which falls in line with our TCSG due diligence procedures when you're using a collection agency. Because the collection agency notification is considered your third attempt to collect, right? The student's ID is added to a collections list, which your collections list is held in TGA COLC inside of Banner. So TGA COLC has every student that you sent to collections. It also should be updated regularly, and it also should be gone through on a regular basis, and anyone who has a zero balance in there should be removed on a regular basis. So if you're sitting here going, oh my goodness, what is TGA COLC? You're missing a few steps on your collections process, and you will probably want to pay extra special attention when we're talking about ZSP COLC, TGA COLC, and TGR COLC later in this training. So there's some specific information that the collection agency wants, which is automatically pulled with the ZSP COLC process. And a student should be placed on hold if they are sent to collections. They should already have a hold from when you've done your due diligence process, like a BU hold or a BL hold, whichever one your college uses. But this hold that we put on for collections is a different hold. It is a CO hold. which is specifically a collections hold so that you know that this student has gone to collections, just like we have a specific write-off hold, right? So all of those holds, and they can be compounded on top of each other or stacked. So you can have a BU hold, and then you can have a CO hold, and you can have a WO hold. So you can have all of these different holds on the student's account. Now, when the student does pay, you do have to remove all those holds, but at the same time, it's kind of good to have different holds. That way you know where the student falls in the process, right? So a hold should be placed on the student's account. It is optional. It doesn't have to be placed on the student's account if you already have a BU hold. But for me, it makes it easier for me to know, oh, we did send this student to collections because they have a collections hold, right? So then your Banner report for your TGR COLC should be ran to show activity and should be updated to show when it was last ran. And then again, once the full payment is collected, the hold should be removed from the student account, and the student should be removed from TGA COLC, which removing that student from TGA COLC is a manual process, but normally we're not working with humongous lists of students that have made payments all at once. So removing those students off in onesies and twosies or 10s or 15s isn't a huge deal. So you should establish a collection agency non-person ID in Spaden. Most everybody should already have that set up if you are currently using a collections account. Some people choose to use a 910 number or a 900 number for them. Some people choose to use like a true third-party ID. Most colleges that I've found are using the word Fudge, F-U-D-G-E, as their account for Williams & Fudge, and that is important that you establish one because the TGA COLC process and the TGR COLC process is all based off of that collection agency ID, non-person ID. So if you don't know what your ID is, ask someone at your college. If that person is gone and they didn't leave notes or they left notes on their computer that have now been deleted, I'll show you a way to search for those later and see if you can find those in Banner and see if you can figure out what that code is. You're also going to need to set up delinquency codes. So delinquency codes are set up in TTBDELI, which is right here. Delinquency codes are used for different things. We have a 95, a 96, and a 97. A 95 means that the student has claimed bankruptcy or, I need to go look at those. A 95 or a 96 means either the student has claimed bankruptcy or the student has a discharged bankruptcy. And the 97 is don't send to collections, right? So there's just sometimes we don't want to send a student to collections. So if we put set a delinquency code up and we put that delinquency code on, it should be put on TSAACCT, then that student will not be sent to collections if they have a 95, 96, or 97 on their account. 97 is just a generic don't send it to collections because I have a specific reason as to why I don't want to send it to collections. 95 and 96 are specific to a discharge bankruptcy or a current bankruptcy, right? So we can't bill students that have a bankruptcy code, so therefore we shouldn't be sending students to collections that we couldn't do our due diligence for. And sometimes when you send students to collections, we don't know because the student has not notified us because they're not great at notifying us that they are having a bankruptcy. And so we don't know. But since Williams & Fudge is a collection agency, sometimes they are notified before we are that a student has a bankruptcy. And so sometimes you will send them to the collections, and sometimes Williams & Fudge will send them back to you and say, this student has a bankruptcy and we can't collect on this debt. So they will help you from the legal aspect of not trying to collect on a debt that a student has with a bankruptcy. However, if they send you back that the student has claimed bankruptcy, then you need to reach out to the student and say, we need your paperwork for your bankruptcy, right? Now, we do err on the side of caution. We are very careful and very conservative when it comes to students claiming bankruptcy, simply because if we try to collect on the debt and they've claimed bankruptcy, we can get sued and have to go through litigation. And so we are very conservative, but we do need to ask them for their bankruptcy paperwork. We also need to be listed as a creditor or on their bankruptcy paperwork, so that we have that documentation there. So, and if we're not listed as a creditor, we still take the bankruptcy paperwork. We treat them like they are a bankruptcy student, but then you reach out to the court in which they're filing and you ask to be placed on there as a creditor. That's kind of what our legal has said. Thank you, Tracy. Tracy says 96 is filed for bankruptcy. I couldn't remember. So 96 is filed for bankruptcy. So 95 must be that they've had their bankruptcy debt discharged. Just keep that in mind when it comes to bankruptcies, that they may know before we are about a bankruptcy, but when they notify us that there's a bankruptcy, then there are steps that we need to take from a business office standpoint, such as asking the student for the bankruptcy paperwork, making sure that we're listed as a creditor on the bankruptcy paperwork, and if we're not, reaching out to the court and asking to be placed on there as a creditor. Last time I talked to legal, that was the steps that they asked us to go through, although they did say to err on the side of caution and, not continue to bill the student and things like that. But at the same time, doing our due diligence to make sure that we're listed as creditors and reaching out to the court on that. So this is our accounting procedure. If you've never seen our accounting procedure, this is it. You can go to the intranet.tcsg and you can download it. It talks about population selections and all kinds of stuff that we use for ZFR Right. And it talks about all of the different things that we do. It is a very in-depth procedure, and so this will help you along the way when you are looking at sending students there, when you're looking at bankruptcy students, when you're looking at payments that are coming back from the collection agency, when you're recording full or partial payments, things like that. It all kind of comes to fruition here. This has not been updated. It used to be 29, it went 25, and now it's either 13 or 25, so we probably do need to update that procedure. So that, Tracy, if you'll mark that down for us to update that. The collection agency fee has changed a little bit, so it's been a minute. And then it just gives you information on what you need to do before you post collection payments running TGRCOLC in audit mode, just to see if there's any changes that need to be made, when to run TGRCOLC, when to update TGRCOLC, removing students, all of that fun stuff that goes along with that. So the write-off process, once you run that in update mode, you should also be running TGRCOLC. The reason for that is because when you write the student off, they no longer owe the debt, right? So they should not be listed in your collection agency box. If you notice when you run ZSPCOLC that you have a bunch of students that say, student is already in collections, student is already in collections, student is already in collections, then you will probably realize that you have not been running TGRCOLC, or whomever at your college has not been running it, or the person that did run TGRCOLC has now left your college and it hasn't been ran for a while. So those are things that you'll need to be running on a regular basis. My suggestion on TGRCOLC is this. I use an app. I don't know if you guys are like, I don't know, for some reason, I just like to have things very organized and done. So when I clean my house, I use this app called Fly Lady. So anyway, this lady's concept is essentially she breaks your home down into different sections, and each week you clean a different section of your home and you set your timer and you clean that for 15 minutes. right? She gives you a list of things that you clean, and you clean for 15 minutes, because her thing is anybody can do anything for 15 minutes, and your home didn't get in a mess in one day, so it's not going to get cleaned up in one day, right? So guess what? Your TGR COLC didn't get in a mess in one day, so it's not going to be cleaned up in one day. So I say use the concept of the fly lady, set your timer for 15 minutes, run your TGR COLC report, and work on deleting students that have a zero balance for 15 minutes a day, right? Or 15 minutes a week, or 15 minutes a month, whatever you can get it, just to get it cleaned up. The closer we get to year end, you know, the more often you might want to clean it up, but especially after you run ZFR right, you're probably going to have a bunch of students that have zero balances left in your TGR and your TGA COLC, which means they don't need to be connected to the collection agency. And so you want to get rid of those. And so deleting the students is important. There are some population selections that we have out there that will find students with zero balances in TGA COLC. So you can run those population selections and go in and delete those. You can also run TGR COLC and not update the last RAND date. It'll give you students that are at zeros. So we have options, but this is super important to read through this particular procedure. Procedures are more along the lines of steps rather than accounting procedures are quite different than Banner procedures. And so these do list your steps that you need to go through. So this one's important. So if you haven't downloaded the procedure for use with collection agencies, go out there to the intranet.tcsg.edu, go to Banner procedures and look at the one that says procedure for use with collection agencies. Print it out. It's very handy and very, very useful. So that is that portion. So nobody, I'm going to give everybody just a second for questions. I'm going to pause for a sec, and if you have any questions, just let me know. If not, then I'll kind of move on from there. Okay, so next on the agenda says, let me find my agenda, go back here. Okay, next on the agenda we have what students can be sent to collections. Mainly, the students that can be sent to collections are, they have to owe a balance, right? They have to owe a balance, and you have to have done your due diligence. 2 letters via email or via, you know, printed letters that you put through the USPS and send it out. But if you send 2 letters and they owe a balance, then those are the students that can be sent to collections, right? Which students cannot be sent to collections? So this is a little bit more in depth, but the main basic ones that you're going to see is if a student incurred the debt before they were 18. I know this sounds weird because you're like, oh my gosh, we have college students, but we also have dual enrollment students who do have to pay out of pocket and who could possibly be under the age of 18 when they incurred the debt. And that's important. It's the date in which the debt was incurred, right? So let's say, for instance, you have a student who was 17 a year ago when they incurred this debt at your college, but now they're 18 and you're running ZSP COLC. ZSP COLC looks at it the date in which it occurred, not the date, today's date. So if you get that and you're like, this student is over 18, I don't understand why they're not going to collections. You have to go and look to see when the date was when the debt was actually incurred. And that date would be the effective date on TASREV, right? So if the student was not 18 before that date, then that's why they're on the report. Students with bankruptcies, right? So if they have a 95 or a 96 on TSA ACCT, then they cannot be sent to collections, right? And so when you're notified by the student that they have a bankruptcy, then you should be going out to their TSA ACCT account and putting on a 90 6 if they're notifying you that they are claiming bankruptcy, and a 95 once that bankruptcy is discharged, right? And then we write them off, and after you write them off, you can remove the 95 because any new debt that they occur after the bankruptcy is discharged, we absolutely can send them letters for, and we absolutely can attempt to collect on, right? So all that has an order. It all has an order in which it goes on. Students who have already been written off cannot be sent to collections. And then 2 years ago, Williams and Fudge said, hey, any student that owes less than $10, we're not going to allow you to place them with us anymore because it costs us more than $10 to attempt to collect on it, right? So if the student owes less than $10, then they won't be going to collections. So that is some of the main stuff, but all of the rest of them are here. So if you look at the ZSP-COLC documentation, which is also on intranet.tcsg.edu, it's down at the bottom under banner documentation, banner external documentation, right? So if you click on banner external documentation, every single Z process we have out there there's the documentation that you can download anytime you feel like it. But this is the documentation for ZSP-COLC. These here, all the way up to from the balance, no balance as a term, from here to here, are what we call show-stopping errors. So those are errors that will prevent the students from going into the collection file. So if there is an application of payment issue, if there is no balance as of the date that you're running ZSP-COLC, if they have a 95, 96, or 97 on TSA-ACCT, they won't be sent to collections. If they're missing attempts, they won't be sent to collections. If the debt was incurred before 18, balance less than $10, and no balance as of term. No balance as of term just simply means that we tried to calculate the balance inside the program, and for some reason we couldn't calculate that balance and determine that student's balance, and so the student has to be entered manually. Or you have to go figure out what the issue is with that student's balance and then rerun the process. Then you're going to have some warnings. These are what we consider warnings. From here to here are warnings. A BU hold added or no BU hold. This student is already in collections. It's not going to prevent them from being sent to collections again, but if you have that notification out there, something's going on with TSA-COLC, TGA-COLC, your TGR-COLC process hasn't been running, something along in there, right? If they're missing an address, if they have an invalid CRN number, which invalidated CRN numbers in our case simply means that it's blank because we have no way of checking whether the student's social security number is correct or not. And also no telephone number. Again, those won't stop them from going, but it will give you information that you may need to look at. And then we have some informational messages, to load and loaded. To load means that they're going to collections when you run it in audit mode. Loaded means that they are in your collections file, and they have been loaded into TGA-COLC. All of that fun stuff has been done in update mode. And then you have the informational DBCs and DBAs. Colleges are not currently using these. We had coded this into the selections process because you can pass on that 13% or that 25% collection fee to the student. However, we coded that in there. Colleges were starting to use that, and then they changed the collections fee, the way that you can collect on fees, and there are certain fees that we are not allowed to charge the student the collection fee on. So that comes, there's a board that is over all of the collections debt for the United States, and they are very tight with their policies and procedures, and Williams and Fudge follows those procedures to a T. So like library fines, parking fines, all of those type deals, we can't charge the student the collection fee on that. So there were certain things we couldn't charge. So that is in the works for us to recode that program, but we're not doing that until after the COBOL conversion, which the COBOL conversion process is taking a lot longer than what we wanted it to, but we don't want to be changing programs when we're trying to recode them. So nobody right now is passing that fee on to the student. The colleges are just paying that fee. So ZSP COLC is your process that is going to create your file for Williams and Fudge. When you pull your file from Williams and Fudge, it should be exactly the layout that you need it to be. There should be no manipulation that you have to do other than to stick it into the Excel spreadsheet. So if we go out here, let me go through, let me find this for you guys. Okay, there it is. Okay, so this should be the one that we're looking for. It takes a minute for my Excel to open. Okay. Yes. This is what the file looks like. So when you download the file from Banner to your local PC, it's going to be a comma delimited file. This comma delimited file you will simply import into Excel, and this is what your file looks like. It's going to show first, no, and AR are all hard-coded. They're going to be all the same. The default date is going to be different per student. Then the student's social security number is going to be placed in there if we have it, the student's ID number, their last name, first name, street address 2, city, state, zip, their phone number, their date of birth, because that is a requirement for them to be sent to the collection agency, the original amount that they were charged, and the balance in which they owe. Sometimes the original amount and the balance will be the exact same. Sometimes they will be different. It kind of works the same way as when you're running balances, right? So if a student has a balance and they come in and made a partial payment, you know, then the original charge is going to be different than the balance. Or their original amount, and then they got some aid, but they never paid after that, right? So the original amount will be the original amount. The balance will be the original amount minus any financial aid or payments the students made, and the balance will be placed on the account. We have to send, it is a requirement that we send the original balance to the collection agency, because that is a requirement from the collection agency policy bureau. So Williams and Fudge has to have the original amount, and then they have to have the balance, because the balance is actually what they're going to be collecting from the students. So there are some things that are required, but there should be no manipulation that has to be done on your part other than to take the file you download from Banner and upload it into Excel, right? And then after that, you will upload that to Williams and Fudge. That is where I cannot help you a whole lot. It is a site that Williams and Fudge has. They give you your login credentials. They do all of that stuff. They handle all of that fun stuff. So that will be something that either someone at your college will already have to know how to upload that to and what your login credentials are, or if you don't know what they are or where to go, we can reach out to Andy, and Andy is very good at helping you upload your information. So this is the documentation for ZSP COLC. When you run ZSP COLC, it will give you, pull this out of the way. When you run, when you download the document for ZSP COLC, it will give you step-by-step instructions on how to run ZSP COLC. If you have any issues that are not on the documentation, then by all means, feel free to reach out to Tracy and I. We are always available to help you guys. So ZSP COLC is the main document that you run, and you're going to want to run ZSP COLC in audit mode first. Then you're going to want to verify all of the information on there, make sure that it is correct. And then you are going to run the process in audit mode. So I have a question in chat that says, if the school signed the contract with Williams and Fudge when the percentage received was 23% and now that percentage was reduced to 13, should the school be paying 23 or 13? It depends on, it's a student by student basis, let me say it that way. So if you had, say you had 25 students that you put on to, that you sent to Williams and Fudge when we were still on the 23% calculation, and then you had 50 students that you sent when we were on the 13%. The 25 people that you sent when we were on 23% would be charged the 23%. The 50 students that you sent when we were on 13 would be charged the 13%. So you're going to have both running around in there until you get rid of all of the ones that were on the 23% contract. So, and there was a certain date, and I can't remember you know, all of our contracts start on July 1st. So it would have been a contract that started July 1st. I want to say that that was like 2022, because I want to say Toya announced this at one of our VPA meetings that we started having right after COVID, and I don't think we had a VPA meeting until 2022. So I want to say anybody that was placed July 1st, 2022 and forward is probably going to be your 13. Anybody before that's going to be your 23 or 25. Don't quote me on that for sure, but I want to say it was around in that year frame as to when that valley will be of that, those few people will be stragglers out there, right? So when you're looking at ZSP-COLC has 14 parameters. Here are the parameters that they have. Your agency ID, most colleges set theirs up as Fudge. If you are new to the collection agency world or you haven't used it and you haven't set up an ID for them, Fudge would be what I would say to set up your non-person account as. And then the default date is going to be the date in which they defaulted. Most of the time, we either use effective date or bill date. So it depends on how you want to look at things. We have the 3-day no harm, no foul rule when it comes to dropping and adding. So technically, we say that the student owes us a balance on the date that they register. So effective date would be what you would put if you say, if you look at it from that standpoint. If you say, I don't want to look at it from the effective date, which is the date in which they registered, I would rather say, hey, they're due when I billed them, right? So they became delinquent the first day that I billed them. You can do that as well. Now, if you use bill date or statement date, you have to be updating the bill date and the student date through ZFR roll or some type of way that you're updating the bill date. So if you're not updating your bill date or your statement date, you can't use that. You have to use effective date. So if you are a college that, when we talked about due diligence last week or the week before, whenever we talked about due diligence, if you are not using ZFR roll to update your bill date and your due date, and you're not using your last bill date as a function of your due diligence, like if you're using Savannah, so Savannah, for example, they're not using the bill date as a part of their due diligence. So they would not be able to use bill date or statement date for ZSP-COLC, but they can use the effective date. So any of those work, any of those are true, because like I said, the student owes at the time of registration. We just allow them to kind of float because we're waiting on financial aid and stuff like that to come through. So the effective date is a true date in which they defaulted, but the bill date and the statement date are also true dates in which they defaulted. It just depends on how you want to look at it at your college. The through term is going to be the term that you enter if you want to maybe you're running it and you don't want to include summer students in your through date or something weird like that. It's optional. This one, parameter 3, was more useful when you used to be able to send a student to collections after you did a write-off. And let me say clearly, once you write off a student, you cannot easily send them to collections because the write-off writes off their debt. So there's no information for ZSP-COLC to pull. Therefore, you can't write them off. So your order is due diligence twice, collection agency, then writing them off. You cannot write them off and then come back and do collections. That is important, important, important. If you say, I wrote off this student, but I still need to send them to collections because I only sent them 2 letters, you're going to have to manually go through and create this. We can't pull it for you, and ZSP-COLC cannot pull it for you. So make sure you're doing your due diligence, your collections, and your write-offs in the correct order. So through term, I would honestly leave blank if I were you. Phone type is the phone type at your college. You can enter up to 20 of them. So if you have a phone type of 1MA, right? So now I can duplicate that parameter by hitting F4, and I can change this to 2BI, right? So if you have a billing one, I can duplicate that, and then I can do 3, let's just say you have HO, right? So those are options you can do. You can do up to 20 different phone types. Your billing attempts would be 2. If you're using the collection agency, you have to have had 2 billing attempts. This is on the honesty policy, right? Because you're entering 2. I could enter 0 and they would be sent to collections. I could enter 1, they would be sent to collections. But if you do that and you send them to collections, the auditor says, I need to see your letters. You have to produce those letters. So if you haven't sent the letters, you can't produce them, right? So it is an honesty policy. This is your letter code for your due diligence. Most people are using build_students, but if your college uses something different, your letter code would be there. Your start date for your letter code is whenever you started billing for that student. Now, I know that you're like, what? I don't keep up when I build every single student. So you put in a generic one. We don't really count the fact that a student was billed 2 years ago. Now, if you build a student 2 years ago and you haven't billed them since and you're trying to collect, I would bill them a couple more times before I send them to collections. But you could also do 01/01/2001, right? That just is a generalized date that we use that makes sure it goes back far enough to pull all of the attempts that you would have had. The hold code is you have to have this set up in your hold table before you can use it. The hold code would be CO or whatever code that your college has decided to use for that. And then you have your selection ID. So your selection identifier is what students do you want to send to collections? This is required. You cannot run ZSP-COLC without a population selection. So there are a couple of ways that you can do your population selection. If your college already has something set up, great. If not, then there are 2 options that you could use. One, I'm gonna pop out here. One, if you put ZFR Write down on and you are consistently updating ZFR Write, then you can use ZFR Write. So if you go here, see this parameter here, 16, 17, and 18. If you go and run ZFR Write in audit mode, so if you run ZFR Write in audit mode and you create an output population selection, it's going to put anybody that is eligible for a write-off into the output population selection, and then you can use this population selection that you created here, you can then come here and use as an input population selection to ZSP-COLC. That's one way that you can get students who are eligible to be sent to collection. And then the other way that you can do it, which I can share this with you, is you can write your own set of population selections where you have one population selection that finds anybody that, you know, has a balance, and then you can minus out the second population selection of anybody that has a balance and has a number, the number of attempts greater than 2, and then you can use the output population selection from there to put it in there. So there's 2 different ways you can do that. The easier way is to use ZFR Write. But sometimes if you don't write off, if you only write off once a year, sometimes you're going to pull students that you've already sent to collections in that one. So it's all dependent on how you want to see it. If you want a clean listing that doesn't say already in collections, already in collections, already in collections, then you might want to have population selections that are separate and outside of ZFR Write. If you're okay with going through and doing a little bit of verification, then you can use the output populations from ZFR Write. So those are the 2 ways that you can do it. If you need help with population selections, let me or Tracy know, and we can help you set up population selections, or we can share population selections we have from other colleges that have shared with us and said it was okay for us to share. Then update is yes or no. Always, always, always run it in audit mode first. Make sure that everything looks okay, clean up any errors that you need to clean up, then rerun it in audit mode until it is the way that you want it to be. Then you can run it in update mode. When you run it in update mode, it's going to put the hold onto the student's account. It's going to put the student into the collections file, and it is going to put the student into TGA COLC so that they are like marked that they have been sent to the collection agency. So that's ZSP COLC. Just always make sure you're running it in audit mode. You can't do any harm running it in audit mode, right? But you can do lots, lots of harm running it in update mode. So just be careful what mode you're running it in when you're doing these. Okay, so then once you run ZSP COLC in update mode, then you get to come to TGA COLC. TGA COLC is based off the agency ID and not the student ID. So don't come here and try to put in the student's ID and see who all's been sent to collection agency. You're going to put in your collection agency ID, which at most colleges, again, is SPUDGE, right? So this one is, these are all of the people that have been sent to collections. They have 1,234 students, so it's over here, record 1 of 1,234, that have been sent to collections. Now, these were sent a long time ago, and as you can see, the balance here is 0. So technically, this student should have been deleted, right? Then, so the next student, the next student, the next student, the next student. So this is also a test database. So, you know, stuff is not going to be right. Now, when you run TGR COLC in update mode, the last reported date is going to be updated, so you know that that's the last time that TGR COLC was ran on this group of students. And like this group of students here, we go back a page, their last reported date is empty. So you know that TGR COLC has not been ran on these students. But you also notice that these have been placed at a newer time, so they have balances. So that student has 582, 344, 567, 439, 916. So it lists their balance, like this student has a $0 balance. They should be deleted, right? So it kind of looks like this. This is what it looks like when you run TGR COLC. You're going to get a group of people. So let's just go run TGR COLC so that I can kind of show you how the delete option works. So if we go here, we type in database, I'm going to put today's date as the address selection date. That's generally what you want to do on address selection date. It should always be today's date. I'm going to put the address hierarchy as 1MA. Yes, print the student's social security number. Yes, print their address. Yes, print their primary phone. And then my run date is just going to be 01/01/2021 through today. I just picked that date from random because I had no idea what data was out here in this database, right? So you may have the same thing, especially if the person that was doing this has left and didn't leave any documentation. So you may want to start, back a couple of years at January 1st and come forward, right? And then just clean up as you go. And then this is like audit mode or update mode. If you put a no here to update the last report date, it won't update that last report date. If you put a yes here, it will. So, running it in audit mode. So we're going to go ahead and run it. And I just want to run it so one, you guys can see what the report looks like, and two, I can show you how I would delete somebody that has a zero balance. So come here, look at your list file. This is what your list file looks like. This is anybody that's in your collection agency report. I have 228 pages of people who are in my collection agency box. So that's a lot. But as you notice, this very first person here, their original charges were $4,333. Their payments for that, so they have an account balance of zero. So technically, this person does not belong here. So what I can do is I can take this list. I'm just going to copy this one right here, and I'm going to go back to TGA COLC, and I'm going to go under the agency fudge, and I'm going to filter. So you can filter by hitting filter or F7. I'm going to filter on the student's ID, which I just copied. I'm going to click on go. So this is how you can see if a student has been placed. The student has been placed. The student shows a zero balance. And I just need to delete them off the report because they don't need to be there anymore. So I hit the delete button and I hit F10 to save. That's how easy it is. So now I can exit out of here. And if I roll back around and run TGR COLC again, I'm going to give it a second. And if I run that again, now the person that was at the very tip top with a $0 balance has gone away. And that because they have been removed from collection. Like this person should also be removed from collection. So as you're going through and you're looking at anybody with an account balance of zero, then, those really should be the ones that you're cleaning up, right? And then anybody that has balances, like, where they go? This student right here, then they'll get a last reported date updated, and then their balance will be updated to what it needs to be if it needs to be something different, right? So say they had this as their original charge, these are their payments, left a balance of $367, but say they came in last week and they paid $150, then if you ran TGR COLC, it would reduce their $367 balance, by the $150 that they paid last week. But it would still leave them in there because they still owe a balance. So that's kind of what the TGR COLC process does, is it works in combination with ZSP COLC and TGA COLC in order for you to know who you sent to your collection agency, because when you run ZSP COLC, if you don't keep the output, you have no idea who you've sent to the collection agency or not. But the easy way is to come here and run your TGR COLC report, or you can go look the student up in TGA COLC as your collection. So all three of those are they're like triplets, right? If you take one with you, you got to take all three. So, you can't just have one and leave the other two in there. So anyway, those are the triplets. They have to stay together, and you need to run them together, right? And so, but you need to refer back to the collection agency policy as to when to run it, right? And it kind of tells you, when to run it. You're going to run it after you run ZSP COLC. You're going to run it before you post any collection agency payments. You run it in audit mode. to see if there's been any changes. And then after you post the payments, you're going to run it again. And you're going to delete anybody whose account has gone to zero, right? And then after you run ZFR right, you're going to run it again, and you're going to remove anybody who has been written off, right? So because if the collection agency collects on a student that's been written off, then you have to reverse the write-off anyway and then put the payment on. So all of that kind of stuff can help you, right? To kind of make it smooth sailing with that. All right, so that's how ZSP COLC works. It works in combination with TGA COLC and TGR COLC. Those are the triplets. They got to stay together. So that if that's an easy way for you to, that's an easy way for me to remember it. Those are the triplets. So they all have to go together. So remember it that way if that works for you, but just make sure that you're regularly running and regularly looking at TGR COLC. And you don't have to run it in update mode all the time. You know, you can just run it and pull that list of students and, you know, go in and make sure. If you haven't ran TGR COLC in a while, you're probably going to want to run it in update mode so that it can update any balances that may have had payments that have come through. And that way, when you're cleaning up your accounts, when you're fly ladying your accounts, that's what I call it, you can clean up those accounts and do them in chunks. And again, if you haven't been running TGR COLC, or the person that was running it is no longer running it at your college, it's going to take you longer than a day to clean that up. So just pick some times in which you have downtime, because, you know, we all have like tons and tons of downtime. But if you have 10 minutes, take 10 minutes, take 15 minutes, run that report, and then go through and delete as many students you can that have zero balances in 15 minutes. You know, that type thing. It always helps when you're cleaning up and trying to get things going and running. If you need help uploading files to Williams & Fudge, Andy Bass, which is abass@wscorp.com. Andy Bass is a super nice guy. He will help you to know where to go. He can help you with the credentials to log into their site to upload the file, and then you can upload the file. If you have any questions or issues, you also will probably have someone from the collection agency that collection agent that's working your accounts. And then the one thing that Andy does ask that we do is, we all know that if you've sent this student to collections, best practice would be if the student comes to your window and says, I need to pay off my collections debt, best practice would be to have them go pay the collection agency like they should, because they should have a link, and then let the collection agency, you know, function as it should. But we all know that if a student walks up to the window and says, I need to give you money, we're not going to turn it down, right? So if you take a payment at the window for a student that has been sent to collections, then you do need to notify Williams & Fudge that you do need to notify Williams & Fudge that you have collected payment, and tell them how much you collected. Did you collect a partial payment? Did you collect it in full? Now, they will still ask you to pay the 13% or the 23% or the 25%, whatever contract you were on. They will ask you to pay that. And the reason for that is because they have been collecting on your behalf since you placed the student with them. So they will ask for that. And I do see that is fair. And so you will pay that percentage. And then if you get gross statements, they will send the entire amount to you. You will put the entire amount on the student's account of whatever they collected. And then your back-end accounting office will send Williams & Fudge the payment. If you chose to do a net payment, then they will subtract out their collection fee, and they will send you the net of that, and then you will place that onto the student's account, and then whatever amount is left that the student owes, you can then turn around and write off. And once you write them off, that doesn't mean it's done. Like I said, if you send them to collections and you write them off, and then the collection agency says, hey, we collected on this account, and they send you money, you just simply reverse the write-off, unapply, reapply so that the balance goes back on the tuition and fees or whatever you're paying, and then you put that payment toward the tuition and fees. So you don't set up a new expense. You do not go in and set up a new tuition. So if they send you money, you don't go in and put in a new tuition charge and then put the payment against that. Do not do that. That will be overstating your revenue, and your VPA will be very angry at you. But you will reverse the write-off. So if they have a WTUI out there, you'll reverse that WTUI. You'll unapply, reapply the WTUIs together to zero them out, and then the balance will go back on the tuition. So just make sure you're doing it right when you collect a payment for someone that is written off. And that not only goes for the collection agency, but that goes for a student who comes back and is trying to register again. So if you've written them off and they have a write-off hold and they come to the window and they say, I need to come back to school, and you say you owe such and such amount, and they say, I want to pay that, you do the same steps. Reverse the write-off, unapply, reapply so that the balance goes back on the tuition and fees, and then you apply that student's payment to the tuition and fees. So it's the same thing whether it's a collection agency payment or whether it's a payment at the window if the student has a write-off, right? Because once you send the student to collections, like if I send a whole group of students to collections today, I could technically turn around and done with collections. And then that balance goes to zero, and then you have an easier time using ZFR right if you as your output population selection to get your input pop cell for ZFPC LLC. If you write them off during the year. Now, your VPA may not agree with that, so check with your VPA, because some colleges write off each term. And they run the write-off process each term, so they don't have to do it all at year end. A lot of VPAs don't like to do it that often. They like to wait till June, right? And then they request their so you have steps that you have to go through on your write-offs as well. So we won't go into all the write-off steps that you need. Just simply because that training is coming up on Thursday, and so we'll talk about that. I was trying to get all of the things that you need to do leading up to year end done. So due diligence, you have to give the student time to come in and pay. So you're doing your due diligence, and then sending them to collections, giving them time to start contacting the students, and then writing off, because you have to request that this student be written off through SAO, and they have to approve it before you can use it. Yes. I got a question in there when reversing a write-off with a Y code. So Y and W are for prior, so prior and for current year write-offs. So current year write-offs and prior year write-offs, one's a Y and one's a W. Yes, you will reverse those as well. And yes, even if the year's out, you would still reverse the old write-off and put it back in there. And for the payment part, like normally we keep our payments of the same terms, right? So, I mean, even if the year's out, we keep the payments the same term. But you want to talk to your VPA. Some VPAs want to do it differently, so that really is a VPA decision. But when it comes to reversing the write-off, you would reverse the write-off within the same term, just so that those will marry together. Okay, so I'm going to stop the recording